Hey guys. Hey, the intro video was so long. I didn't know it was that long. It was annoying me. Ciao. Okay. So I wanted to get on and hop on and talk and go over some of the topics that I touched on briefly in the EYL interview. If you haven't seen it, it just dropped an hour ago. So you're not too behind. But I definitely would encourage everyone to go watch it. We discussed ways to boost your credit score. Unconventional ways to boost your credit score. Key, I gotta add you as moderator. Um, we discussed ways to boost your credit score, like I said, unconventionally. So I try to focus on topics that or tips that are not widely known. Obviously, some people know it, but like not widely known and not typically focused on because, and also first and foremost, that are effective. And I know for a fact that they work. I've seen them work routinely. And I had about 8, but I believe I only got to like I think 4. I think 4 because they were a bit, some of them were a bit complex, and I wanted to make sure that um the audience would understand what I was saying, which I still don't know. I don't necessarily think that I accomplished the second point to my satisfaction, but it's all good. It's all good. At least I was able to get that information out, and I'm just praying that, if people are confused, they, research the information, follow my channel so that I can provide more context. Cause y'all know I can't stand giving no half a information. Yeah. So, anyways, I wanted to go over the topics. And I also wanted to take questions. I definitely wanted to take questions, as I always do. So specifically, I don't know if I can share my screen in the, yeah, I can. So let me pull up, and then also I will include a downloadable document for everyone to access for free. And I'll show you the document right now actually. Let me pull it up and at the end of this live, because I meant to put it in my bio before, but it didn't happen like that. So, all good. It's all good. But let me load it, and then so you guys of course can screenshot like the content that I show you guys, or you can just download it. It doesn't even matter. Hold on though. Actually, I can drop the link because I know I uploaded it to Google Drive. So I'll drop the link in the chat. Yeah, let's just do that. Let's just do that. Make sure y'all go and watch the EYL interview. Please go and watch the EYL interview because this live will probably not make that much sense to you. Um, well, yeah, it will. It will. Hold on though. I'm trying to pull up the document. I'm trying to remember what folder I saved it in. Oh, okay. All right, we good. We good. We good. All right. So I don't even know which one I want to go over first. Be thy name. All right. And by the way, if any of you have any questions in the meantime, throw them at me. Throw them at me. Okay, here we go. Here we go. Here we go. Here we go. All right. All right. I had to go freaking download it again from my drive. Okay. Present, share screen. All right, it's uploading to the platform, and it shall be available momentarily. Let me know when you guys can see it and if you can see it clearly. The kingdom come in this way. Hold on. I know in the group you guys can't see it yet because I'm trying to upload it. I should have just, I'm gonna end the live in the group and then share my YouTube live in here because it's not allowing me to do both. But hold on, because I actually, can I connect it to the YouTube? Yeah, I can. Give me 1 second, y'all. Okay, so the trick was how to improve your score, how to boost your score in 2025. And I wanted to, like I said, focus on non-conventional ways that we typically don't approach or usually approach credit. And also, I like to focus on the things that maybe people don't even know to search up, because it's just like all information is, I guess, quote unquote, Googleable. However, if you don't know what to search or you don't know what you're looking for, it's not going to be a very constructive search. Um, so yeah, let's just start schedule out. I bet, yeah, I have to make sure that I am putting this live in my community, because yeah, we not doing them. Uh hold on, y'all. Let me I just have to connect it really quick. Really, really quick. Girl, be quiet. Okay. All right. I needed to get the link. And I promise you, I'm tapped in. What's today? 10:30. As it is. Okay. My bad. My freaking bad. Okay. Okay. It's in there. It's in there. We good. We good. Now I only have to focus on one screen at a time, which is great. Okay. Uh can y'all see that? Okay. All right, we good. We good. Okay. Just act like we just started. Okay, y'all. Let's just run the whole beginning back. Okay. All right. So welcome. For all of y'all who new here, who is not really familiar with me, who is not familiar with my platform, what I do, what I teach, all the boring stuff that I hate going over, but I'm gonna go over it. I am Shonda Martin. I am a board certified credit educator. I specialize in helping individuals improve, repair, increase, whatever word you want to fill in the blank, their credit scores, their personal credit scores. I have been repairing credit, and I don't really like to say repairing credit, but I've been a component of helping thousands and thousands of individuals improve their credit online since around 2016, where I started on Facebook. I started a small group at the time, and the group eventually grew to what was at the time the largest credit platform and credit group on Facebook. um and in that, because it ain't about the group numbers, it's more so the where I take the most pride from the group is not the quantity of members, it's how many success stories came out of it. Like that, I'm very proud of that. I will never stop being proud of that. Because at the time I had bad credit, I had my credit scores were like 400, 412, whatever. And as I embarked on a journey to repair my own credit, I did it alongside thousands of others. And then I eventually went to school for it, not school for it. I'm sorry. I eventually received formal education in it. In what I mean is FICO. So I was certified by FICO. I took a FICO course, and I was also board certified. Yeah. So all of that is out the window. So if you're new here, welcome. I'm Shonda. I hope you guys seen the EYL interview. Actually, of all of those in attendance, who has seen the EYL interview that just dropped an hour ago? It just dropped an hour ago. We should have done like a viewing party. I was in the chat or whatever. So I definitely have a few notes that I took that I wanted to address, because there's a few topics that I kind of wish that I would have talked about a little differently or mentioned certain things. Because my biggest freaking I can't stand the ideal of confusing someone further. Like that grinds my gears. And when I don't feel like I was clear in giving the information, or not even clear, just not giving enough information on a certain topic, it'll literally bother me until I know that I have corrected that. So I hope you guys, if you guys did see it, I hope you were able to pick up a few gems. But let's just get straight to it now. Mastering your credit in 2025. By the way, guys, I will make this document available for you guys to download for free. If you're new here, I have full-blown webinars on my YouTube channel. I've been doing it for years. So there's probably a video for any credit topic that you can think of, from repairing your credit, disputing collections, charge-offs, everything, literally everything. Okay, so just go and check out my channel or whatever, because we're not going to be able to discuss all of them fully this video, but this is kind of just like a refresher. Now, if you are looking to repair your credit, master your credit in 2025, it will first cause or it will first you will first have to unlearn everything that you think that you know about credit, all of the habits that you have been implementing about credit. You have to be willing to unlearn that and relearn it. And I say that because all of the standard information out there about credit is typically not necessarily wrong. It's just not all the way right. And I don't know about you, but if something isn't all the way true, then it's just wrong in my eyes. So yeah. Now, the very first tip or strategy that I want to touch on is the 30% rule. Now, I talked about this a lot in the EYL interview, but I want to stress it on my own channel as well. If you are a member of my community, you already know what I'm about to say, because this is a topic that, okay, now, reporting a 30% utilization is the percentage that most Americans go by when they are using their credit card. Like we are just taught from the time we get a credit card that stay under 30%. As long as you pay back your credit cards under 30%, or as long as you keep your utilization under 30%, then you good. You good. Like, that's what we are taught. I'm talking from our banks themselves. Like, if you log into your credit monitoring app, if you log into your bank app, they'll also advise you to get your utilization under 30%. That is the biggest lie that we have ever been taught, guys. Not only, I don't even have to get into why the banks inform us that or try to teach us that, but just know that benefits them so much. It hurts you a lot. Okay. So that's why I have a visceral reaction when it comes to it. Why? And then on the other hand, my visceral reaction comes from the grieving that I feel when I see that people are reporting 30% and don't realize how many points that they are leaving on the table. That is just, it kills me, because it's so many people that think that they have bad credit, think that, are not getting approved for credit cards, not getting credit limit increases, and they think, and they have probably been trying to do everything right. And you probably think that you just will never improve your credit. You must be doing something wrong or whatever, right? Like, you are probably very defeated, and it's probably because how you have been using your credit cards. Okay? So when it comes to credit cards, actually, yeah, let me bring up one more thing. But when it comes to your credit, and when it comes to credit cards, it isn't only important to use the card, obviously, but it is very important that you know when to pay the card back, how to pay it, and all of that, right? And it's for this very reason right here. Let me move my okay. It's for this reason right here. This is a snapshot of how our credit scores are broken down. Okay. So our credit scores range between 300 and 850, right? That is 550 points in between. That 550 points are what we have access to, are what we have the potential to get. The more of those 550 points we get, the closer we'll be to 850, right? We start at 300, right? That's the lowest your credit score can get. They'll give you 300 points. You have to figure out how to get from 300 to as close to 850 as possible. That 550 points in between are specifically allocated to these 5 categories. Your payment history, which is 35% of your credit score. Not only is it 35% of your credit score, it is worth up to 192.5 points of those 550 points. So you can already see that a big slice of that 550 points belongs to payment history. And then we have the amounts owed, aka credit utilization section, which is 30% of your credit score, and it takes up 165 of those 550 points. And then you have credit age, which is 15% or worth up to 82.5 points. You have hard inquiries, and then you have credit mix, which are both equally yoked. They are worth 55 points each. You add all of these categories up, you're going to get 550 points, and that is how our credit scores are allocated. Knowing this and understanding how to practically apply this will change the way, I'm praying that it will change the way that you see credit, but also it will change the way that your financial experience and your credit experience is. It will change your financial life, right? So, first off, screenshot this. You don't got to screenshot. Let me screen everybody. If you don't already have this, screenshot that, because nothing that I say going forward will make sense unless this is the foundation of how you are viewing credit. I am so mad that I didn't show this on the EYL episode, but yeah, whatever. So everybody got that screenshot? I'm gonna give you about 10 more seconds, and then I'm gonna move on to my next point. I'm gonna leave the questions to the end because I get distracted, y'all. Everybody got to put a 1 in the chat when you have screenshot this, and I can move on. All right. Okay, cool. All right. Now, your credit utilization, which I said is the second largest factor of our credit scores, it's 30% of it, also worth up to 192.5 points. The utilization that you report every single month directly impacts how many of those 165 points that you are awarded to your credit score. Okay. And obviously, the better you are at reporting a lower utilization on a consistent basis, the more of those points that you will get. I'm going to tell you right now, it isn't possible to get all 165 of those points if you are not in this first category, which is between 1 and 3%. Between 1 and 3%. So if you are not routinely reporting your utilization to between 1 and 3%, then you are missing out on some of those points. I'll go a step further. If you are routinely reporting 30%, then you are missing out on, of the 165 points, you're missing out on about 70 of those points. 70, right? Now you see why I hate the entire idea of that 30%. That is nearly 70 points that we willingly just leave on the table because we think that reporting a 30% utilization is good. That also, let me also tell you that if you cannot get a high credit limit, if you can't get a credit increase, or you find that you are only being approved for credit limits under $1,500, under $5,000, honestly under $10,000, that means that more than likely your utilization that you are reporting, which utilization is about 80 to 90% of the reason for credit limits, right? Even more than income, because that's another excuse that a lie that we like to believe. It's not your income why you have a low limit. It's the fact that you haven't demonstrated that you have your ability to borrow is not risky. Like, they're scared of you. They're scared to lend money to you because you have not shown them in black and white that they can trust you with those limits, right? And also, let me address another misconception. You not having a 700 credit score is also not why you don't have a high limit credit card. That's just a lie that we have to stop believing. Before my credit score, when my credit scores was in the 600s, I had over $100,000 in credit limits. I don't say that to brag about anything because it's not my money anyway. Credit limits are not our money. But I'm just saying, I want you to understand that your credit score doesn't matter to lenders, right? Our credit scores matter to us as consumers because that's the only thing that we know about credit, right? Like, that's for us to understand. Your lenders are looking at your credit profile. Your credit score does not determine your limit. Your credit score doesn't determine if you are going to be approved or not. And if you believe that, then ask yourself, why are there so many people with 700 plus credit scores that cannot get a credit card over $5,000? Why do we still experience credit application denials when we have over $700, or not $700, a 700 credit score, right? Like, so that tells you and that shows you that the number of your credit score, that doesn't matter. There's a ton of ways to falsely inflate your credit score. We are not fooling the lenders when we try to do that, which is why our credit profile and how we set that up is the standard and will be the measurement in which they would use in order to determine how much interest we're going to pay, what we qualify for, all of that. Okay. Now, my ceiling and my golden rule when it comes to credit cards, if you are not reporting 1 to 3%, which I only usually do if I know I'm applying for something, right? However, on a month-to-month basis, on an average basis, I'm going to make sure that my credit utilization is below 9%, right? Is below 9%. That's my ceiling. I mean, it would have to be a catastrophic emergency that, Lord forbid. I make sure that my utilization is under 9% every single month. Every single month. And let me tell you, let me also say this for those of you who may not kind of grasp the concept of credit utilization. Your credit utilization only matters 1 day a month, and that is on your statement date. So when I say report your utilization under 9%, I'm not saying that you can only use 9% of your credit limit. No, then what would be the point of having high credit limits, right? No, that's not the same thing. Utilization is what is reported when your billing cycle closed, right? So your utilization is only counted when your billing cycle closes, because that will show the lenders and show your bank how much of what you borrowed are you carrying over to the next month. That is the only thing that they care about. TransUnion, Equifax, and Experian, they're not concerned with how often you swipe your credit card. They're not concerned with how many transactions you made throughout the month. They're neither concerned with how many payments you paid towards your credit card. We're not giving, we don't get we don't get double credit for making more than one payment in a month. No, there's a field of, did this person make the payment? Yes or no. And that's a one credit per month, basically, of your payment. The only thing that you need to be concerned about is the utilization, because that is what varies and that is what will affect your credit score every single month. I want to be clear about that. Every time it refreshes, it's going to affect you, right? Now, back to your statement date. Your statement date is the last day of your billing cycle. It is not your due date. Your due date and your statement date, they're two different things. Your statement date is the last day of your billing cycle. So you can find that out by either logging into like your banking app, or the quickest way that I usually do is like look at a credit card statement. Go to your credit card statement. Hold on, I think I have an example. But look on your credit card statement, right? And they will have they should have your statement date, but if it doesn't outright say statement date, then just look at your billing cycle. It'll have a span of between 30 and 31, or 29 and 31 days, depending on what month you're in. The last day of that billing cycle is your statement date. Some banks will outright, or some banks will refer to it as closing date, by the way. So don't get too caught up in the language. You just need to find out when your billing cycle closes, or you can just literally call your bank if you can't find it on your statement. Now, speaking of statement, your statement balance. Is this not showing to y'all? Okay, I got it. Your statement, no, that's not it. Yeah, it is. I'm trying to show you guys a credit card statement so you see it. Did I put one on here? No. Okay, anyways, your statement balance, if you look at your most recent credit card statement, your statement balance is what your utilization was the month prior. Okay, that's what determines your utilization. Okay, so as long as let's say you have a $500 credit card and you ran it up, you spent every red cent of that $500. Let's just say you had a bill that came up that was $500 and you just had to pay it. Do you, right? The only thing that you need to be concerned about is no later than 3 days before your next statement date, you need to make sure that you pay back at least 90% of what you spent. So you need to if you have a $500 credit card, you need to get that balance to under $50 by your statement date. That's it. And guess what? Right after your statement date passes, you can run it up again for anyone cares, because the credit bureaus are not made privy to your balances throughout the month. They don't care about that. Like, that's not like, that doesn't determine anything. Your bank may care about that, right? Like, you shouldn't go over your limit, but what you need to worry about and be concerned about is the balance that you allow to report on your statement date. So also, if you most banks will take about like a day or two to process your payment and post it on the account. So keep that in mind. So that's why I always sort of I always just advise you guys to make sure that you lower your balance to under 10% a few days before your statement date, because your statement dates, it's an automatic process. So at 12 o'clock on your statement date, your account is pretty much snapshotted, right? Like the system takes a screenshot of your account and they send a copy of your statement to you, like they'll mail it out, and then they'll send a copy of your statement to the credit bureaus. And obviously the copy that they get is not as detailed as the one we get in terms of like the transaction history and all of that. But what I just meant is like the balance on the account and all of that. That's all the credit bureaus care about. So the second that your billing cycle ends, TransUnion gets a copy and you get a copy, right? That statement balance that's on your statement is what TransUnion, Equifax, and Experian will report as your utilization, and that'll remain for the next 30 days. So every single month that your utilization refreshes, you have the ability to add to your credit score and increase it or decrease it, right? Now, that brings me to my next point. If I can get to my next point. Wait, where was we at? No, that's not it. Okay, right here. That brings me to my next point. There are zones, there are thresholds, there are tiers, right, to your utilization. So remember when I told you guys there was 165 points that was allotted for credit utilization. When you are reporting 30% or high, that I'll just go down the list. If you are reporting between 1 and 3% routinely, you are getting majority, if not all of the 165 points. I say majority because depending on how you've been behaving and your like average utilization, unless you have been doing it for more than 6 months consistently, then you're not getting all of the points. But you are getting majority of them, even if it's your first month reporting, right? Now, between this was supposed to say 4 and 9. Anyways, between 4 and 9%, right? Then you are getting majority as well. It's probably like only a few points difference between the first two levels. You can't go wrong either way with reporting under 9%, right? Like, you never can go wrong with that, because that is seen as pristine. The top 1% of credit scores, the top 1% of credit profiles, meaning like the people who have the highest credit scores and the best profiles, they report routinely between 1 and 9%. Okay. Now, the only time that I stress myself about like making sure that I am reporting between 1 and 3% is if I know that I'm applying for something the following month, right? So I'll just give you guys a quick tip. If you are seeking a credit limit increase, if you know that you are in the market for buying a car, you know you need a car, you know you're going to apply for a car soon, or especially if you are applying for a home, the best thing that you can do for your credit profile, the best thing that you can do for your upcoming credit application is the month prior. So not the same month, but the month prior, make sure that you lower your utilization from whatever it is to between 1 and 3%. That allows you to maximize and squeeze out as many points as you possibly can for your from your credit profile. Okay. So that will also make you look more favorable to the lender. When they pull your credit application, they're able to see a extremely good credit utilization. I can't stress that this point enough, especially if you are seeking a credit limit increase or applying for another credit card. There is nothing worse than when somebody applies for a credit card with a 30% or higher utilization, or a high utilization at all, because you have to understand that the amount that you get approved for, that the bank approves you for, is directly dependent on the utilization that you have at the time of the application. That they will paint a full picture of who you are based on what your utilization was at the time that you apply for them. So that's important. If you find yourself not ever being able to be approved for any high limits, Or I'm gonna go a step further. If you can't get instant approvals right now, right? We've all been there. However, your utilization that you report at the time of application directly impacts that. Directly impacts that. If you are a member of credit account, if you are a member of my, you already know the rule. Don't even waste those people's time. Don't even waste your time and apply for anything until you get your utilization under 9%, because all you're going to do is either put yourself in a position where you are going to be stuck paying a high interest rate that you didn't have to, a higher interest rate than you had to, or you're just going to get approved for a credit limit that your credit profile likely could have gotten more. You could have been approved for more had you just lowered your utilization a month prior, the billing cycle prior. And it's important to do it the billing cycle prior, because when you apply for credit, your lender your lender will pull your most recently generated credit report, right? And our credit reports are only generated once a month. It's not like the credit monitoring apps that we log in on and we see or think that like our credit reports updates daily. No. That's not how our real true FICO scores and our credit reports are generated, right? Our credit reports directly from the credit bureaus, they're only generated one time a month. Okay. So unless you are like in a mortgage process and you get a it's slipping my mind, whatever. Anyway, that's neither here nor there. A rapid rescore, that's what I meant. A rapid rescore, which is literally the credit bureaus doing a mid-cycle update for you under a special occasion. Then when you are applying for credit cards and stuff, you can't get that. It only updates once a month. So it's super important that the month prior, like no, in 2025, we are no longer doing impulsive applications. Don't do that, y'all, because you only do yourself a disservice. I promise you, even if you did get approved for a $10,000 credit limit with 20% utilization, know that you could have gotten way more had you lowered your utilization. Period. And there's no comma to that. I don't care if you got approved for freaking $50,000. If your utilization was high, you still could have gotten more. And that's just is what it is. Okay. Now, between I'll just skip to 30%. 30%, you missing out like on 70-ish points, most likely more. And I'm gonna be honest, I don't even like addressing the last category, but if you are reporting anything over 48%, most banks are seeing that as maxed out anyway. Right. And that's one thing that I wish that like we would certainly be taught more, because not a lot of people know that or understand that. When you have a credit card that is reporting over 48.9% to be specific, then you are literally, from most banks, being marked, your credit profile is being marked as a maxed out, it's called a maxed out penalty, okay? So that means that at 48% that you are reporting, you are literally being penalized the same as somebody who have maxed out their credit card, which is obviously the worst type of borrower when it comes to credit cards. And so if you are seeking a credit limit, if you are seeking any credit and your utilization was above 48%, and y'all could have you did this before, you could be honest. Listen, we listen and we don't judge. Okay. I've done it before too. I've done it before too when I didn't know, but I just want you to realize how much that hinders your credit application. It truly hinders your credit application. It is diabolical how much that knocks you down and affects your borrowing ability. Okay. So 2025 going forward, don't apply for nothing if your utilization is not between at least under 9%. But if you want to get the most out of your score as possible, then between 1% and 3%, that's the golden spot for applications, right? And on a month-to-month basis, seek to only carry over less than 10% of your credit card. And in doing that and making a habit of that, you should be able to get multiple credit limit increases yearly. There should not be a year span that you should go without getting a credit limit increase from your credit card, unless it's a credit card that does not increase. Like there are some credit cards that are solely made for beginners and that they do not increase, right? Now, do I want to keep? Okay, so one other thing on these credit cards, and then we'll move on. So also, most people are only used to looking at credit utilization and credit cards as an overall thing, as an aggregate thing, meaning that when you think of your utilization, you think of counting all of your credit cards in one bucket, and there's an overall credit utilization that you have, like, right? It's called aggregate, right? So when you log into your credit monitoring app, they'll say, hey, your utilization is 17%, right? And you think that you are in the clear and you're doing good, or even if it's under 10%, you're like, oh, I'm good, I'm doing good, right? Understand that that's an aggregate utilization, meaning that's all of your credit cards. And yes, that matters as well. However, if you want to maximize those points that we were just referring to, and also maximize your borrowing power, right? And look the best to lenders, then you have to approach utilization on an individual basis. You can no longer look at utilization as an overall thing, right? Because obviously, if individually each of your credit cards are hitting the mark, then obviously overall it will as well, right? However, there can be, because I want to stress this, because like I know for a fact that it was a point in time where I would think that even if one card was like, let's say 50, 60%, and then another card was 17%, and then majority of the cards was like under 9%, and my overall utilization was reporting at, 9, 10, I thought I was good, right? But I didn't realize that, oh, so the individual card matters. And I'm not gonna hold you. Bank lenders actually care about the individual. They actually care about the individual utilization more than the overall, right? So make sure that each individual card is meeting these standards, these tiers, okay? And then that's when you are going to see your credit score soar. Listen, if you don't believe me, just do it. Just do it and see. Don't it shock the crap out of you when you realize how long you have been going with doing the standard, and how many points you have been missing out on. Test me. Yo, I only got in one area. Whatever. Test me on it. Test me on it. This is the most exciting thing for me, because I love when people haven't been doing the 1 to 3% thing, and then they realize it, and then they do it, and it blows their mind, because it blew my mind when I first realized it. But that is the first thing and the best thing that you can do, because that your utilization can make a change in your credit score within 30 days, right? Like, your utilization is the only thing that has the power to affect your credit monthly. Because when you think about loans, when it comes to loans, installments, they do not affect your credit score on a monthly basis. So if you have a car loan, a mortgage, or whatever, you'll notice that you could have been paying for it for a while, right? And your credit score ain't really moving. You probably like, dang, I didn't had this car, and I didn't been paying it on time for years, for years. So why is my credit not good? Why didn't my credit increase? That's simply because loans and credit cards are different, and they behave differently. They both mean a lot to your credit profile, and you need both. However, they behave differently in the sense that a credit card refreshes every month. So a credit card every month has a direct impact on your credit score because of utilization. Now, your loans, a loan really does not do justice essentially to your credit profile until you are 90% done with that loan. And that's because a loan, it has a term length, right? And a loan has a set monthly schedule. A set monthly payment. So a lender isn't um they're not amused, or what's the word? I don't know why I'm catching it. Whatever. They are not. They don't care that you got a loan. Like, right? Like, they don't care that you got approved for the car. They don't care if you've been paying it for 3 months, because that doesn't really speak to who you are as a borrower, right? What they do care about is, oh, so you not only do you have a car, okay, cool, but you were able to abide by the agreement that you made with that company. And we see because of the course of this loan, because of the history of this loan, we see that you have paid exactly what you are supposed to pay monthly, and you're nearly finished, right? So that's why you'll notice that with a loan specifically, your score will start to increase towards the end of that loan. I'm not saying paying it off early. I want to be clear. I'm not saying when you pay it off early, because in fact, when you pay off a loan early because it already had a pre-established end date, and your credit report was expecting X amount of payments that will however long. Let me explain that. I'm sorry. Let's say you go get a car from a car loan, and your car loan, the term length is 48 months, right? You agree to pay $300 for 48 months. Let's say in 24 months, you ended up just paying off the car, right? And most people would think that that's a good thing. Most people would be like, oh, cool, I can expect my credit score to go up. And then most people find out very soon after that their credit score decreased because of that. Why is that? Why is that? It's simply because you lost credit age, right? Remember, credit age is the third largest factor in our credit scores. It's 82.5 points. Not only did you lose credit age, right? Let me show you how you affected the another category. You also affected your payment history. How? Well, because you had a 48-month term length. When a loan hits your credit report, a term length is established. So that means that your credit report has an expectation to receive 48 payments from this loan. If it only received 24 payments, right, then you didn't get all that you could out of the loan, right? And I'm not saying that to say that every single loan needs to go to its term limit. No, because there are situations in life where we have to end long-term installments early. In fact, if you buy a car and let's just say 3 years later you want to trade in that car, okay, that means that loan is going to end and you're going to start a new loan. You will you will take that temporary loss in dropping your credit score, and you'll make them back. You'll get it back, so don't worry about that, right? But that's where short-term installments come in at, and that's why I highly, highly, highly always recommend that you guys have a short-term installment and do not pay off that short-term installment early, simply because hear me, you need the history on your credit report of completed loans at least one every 3 years. That's the golden. That's the golden rule. If as long as you make sure that you have a completed at 100%, meaning do not end that early. Do not end it early, because the only way that you are able to build credit is if you build credit. You got to build credit. You get credited one payment per month per account, and your payment history. Think of it like a bank. So if you as long as you make that payment, you got another payment in your payment bank. The more on-time payments that you have reported to your credit profile, the more resilient your credit profile is. The more experienced you are as a borrower, right? And I know you're probably thinking like, well, I paid off the loan. Why doesn't that count? The credit bureaus and how credit reports are set up, they can only credit you one payment per month, one payment per cycle. There is no field to say she made a double payment this month, right? Now that obviously helps you on the back end. It helps your interest. But if the goal is to build credit, which I always say the cost of building good credit is the interest that you pay in the beginning, right? Think about that. The cost of good credit is the interest that you pay in the beginning, because once you do build good credit, what do you save on the most? Interest. You can either not build good credit and pay high interest for the rest of your life, or you can build good credit and pay interest, not be concerned with paying interest in the beginning, and then eat off that for at least 7 years, because your credit report is a 7-year journey, right, at a time. So do like in the beginning, you're going to have to pay interest. You're going to have to pay interest because it takes credit to build credit, right? So in the beginning, I always say at least 2 years. If you can really dedicate 2 years, 24 months of not paying, like, of doing pretty much what the profile that I'm about to show you, which is this, but I don't want y'all to get distracted real quick, because I want you to hear what I'm saying. If you eat the interest in the beginning, you will be able to eat off very low to no interest in the end, right? My first car, I had a 28% interest rate, right? I had a 400 credit score, but it was a 28% interest rate. I remember paying for that car for 3 years, and I went to the car lot to get a new car, right? That I I kid you not, I don't even believe that I had made a dent in the freaking car. Like, I remember them telling me how much I owe, and I promise you, it was more than the car was even worth. That wrecked me, and it changed just it just shattered me. But it also opened my eyes to this thing called credit. I'm like, okay, so what? I thought I would have good credit because I was paying this car note. Like, I was very proud of paying that car note. I think I even had like a furniture account from like Grand or something. And I was so proud. I'm like, oh, I'm about to, yeah, they better, yep. I already know I'm about to get a great interest rate. No, I was not. I did not, rather. Anyways, now my most recent car, which I haven't bought a car in a few years, but my most recent car that I bought, my interest rate was 0.1%. Which is nothing. I meant 1.0%. Lord, my bad. 1%, right? It was 1%. I went from 28% to 1%. I went from paying for the one car that wasn't worth it 4 times over to paying under the freaking market value of that car, right? So, do you understand what I mean when I say the cost of good credit is that credit, that interest that you pay in the beginning? But the cost of bad credit is the interest that you will pay for the rest of your life. Period. There is no way to have good credit other than building credit. There is no way to have good credit other than building credit. You cannot out dispute your way to good credit. You cannot repair your way to good credit, right? When you repair your credit, the only thing that you're able to do is fix the things that you did in the past. Try to fix the things that you did in the past, right? That doesn't affect your current credit profile and going forward, right? Majority of the points are allotted only to active accounts. So that means that if you are not building credit and you think that you are improving your credit or making strides in your credit by only focusing on repairing, I want you to know that you're hustling backwards. You are doing it wrong. You are doing it wrong. What you should do, the greatest thing that you can do is pair those journeys together. Stop looking at repairing your credit and building credit as two separate journeys. Stop thinking that let me wait until I repair my credit in order to apply for this credit card. That's respectfully, that's insane. And I want to tell you, and I want to tell you, I want to show you why, which I already showed you in the beginning. If credit utilization is 30% of your score and payment history is 30%, is 35% of your score, and both of those are the largest factors in your credit score, then that tells you that and that tells you that majority of our credit points are allotted for building credit, because in order to have a payment history, in order to get the points in payment history, you have to have reported on time payments. In order to get any points in in the amounts owed section, you have to have an active credit card, right? So if you are a person that chooses not to get a credit card, right, you are leaving 30% of your credit score on the table and just leaving it. Get a secure card, get a subprime card. The type of card, the company, none of that matters. The only thing that you need to be concerned about is if it is a revolving line of credit, which is just a credit card, okay? Not getting a credit or thinking that you need to wait for whatever time to get a credit card or to start building credit is the enemy of good credit, because good credit is time. It's time. So instead of, like, there's a concept that I hear often where it's like, our credit starts over in 7 years, so I'm gonna just wait. What are you waiting on? That's 7 years of credit that you could be building. What are you waiting on? No, every single month you should be getting credited and adding some payments to your payment bank. The more on-time payments that you have, the more the higher your borrowing power is. That's it, right? The top 1% of borrowers have successfully made more than 500 payments on time. That's reflected in the last 7 years. So just for those of you who are already building credit and have experienced experienced in building credit, here's a little secret. Once your credit profile gets over 500 points, 500 payments, right? Once your payment history has over 500 payments reported, then you actually automatically move up to a higher tier when it comes to your borrowing ability. Meaning, like, now that's when lenders consider you a extremely experienced borrower. When you hit the 500 mark, a lot of people don't know that. After 500 on-time payments reported, your credit profile goes into a different bracket. Literally, it's like tax brackets, right? Your payment profile enters a higher bracket once your profile hits 500 payments. That may sound crazy or not. It may sound far-fetched to a lot of people, but it's simpler than you think. In order to reach 500 payments, all you would need to do is have 6 accounts reporting. You just need to have 6 open accounts, right? And it has to report for because your credit profile is 7 years. So as long as you've had 6 accounts for the past 7 years, you'll get 500 payments. You'll get 500 payments. Obviously, you can do it faster, but that was like the least, the minimum, the minimal way. I don't know. Whatever. Yeah, get what I was trying to say. Okay, back to what I was saying. Child, I keep getting distracted, but that's cool. Okay. Now, Another thing before we leave, credit utilization. Yes, I'm gonna beat the credit utilization in you guys' head because I'm telling you, this is like that's what moves the pendulum. I promise you. If you just really understand how to use credit cards to your advantage, it will change your life. It will change your life. One last thing on credit utilization, I think, and I don't think I said this on EYL, but hey, I put it in the packet. So the AZO method. Has any of you ever heard of the AZO method? Let me know. This is if you are in the market of purchasing a home, listen up. This is definitely for you. One of my main, I guess, career paths or whatever now is helping and assisting people with closing on homes, right? Specifically assisting them with improving or identifying any areas of opportunity within their mortgage scores. I'm considered a mortgage specialist when it comes to mortgage scores. Now that means I'm not a realtor. So what happens is if somebody, for example, they'll get a pre-approval for a home, right? And they are X amount of days from closing. And as you know, if you've ever bought a home, you know that not only does your lender or your loan officer, your lender pull your credit in the beginning in order to see if you qualify, but they also will pull it a last time right before closing to ensure that your credit profile is still good, right? Like did anything happen between the time you received your pre-approval to the time you're about to close. They will always check your credit at least like 3 days before closing, or even most times on the day of closing. So your credit score at the time of closing is what seals the deal. So doesn't matter how good it was when you were pre-approved, the determining factor is the closing, right? I say that to say that, and also with mortgage scores, if you've ever purchased a home, you also know that every point counts. Every point in terms of your credit score, it counts, because for interest and all of that. And some lenders will have draw a hard line, like you cannot have a score under this, under 620. Like I need you to get to at least X, right? And so what happens is a lot of times I come in right before closing, right? I come in right before closing where they're like a month or a few months out, and they're coming to me saying, it's usually real estate agents. Shout out to whoever, if you in here from your real estate agent or that's how you met me, shout out to you. Y'all always send me messages, so it's always cool when I see that. But anyways, right before closing or whatever, they'll come to me and say, hey, can you look at this credit profile? Can you look at this credit report? And can you identify any opportunities? Because this person needs 12 points, right? This person needs X points. What could they do at the last minute? What could they do? And I'm gonna be honest, most of them are usually within like 45 to 30 days. So it's always fun. It's like a rush for me. But anyways, can you identify any areas of opportunity that, because this person needs 14, 15 points, right? And if you know mortgage scores, you know that is hard to get. It isn't like the credit scores that we're used to dealing with. Mortgage scores are extremely stubborn. And not the things that affects our FICO 8 score, which is the score that we are used to like dealing with and most lenders pull, the mortgage score is chilling. It's unfazed, unbothered. It will stay where it is and it will be chilling, right? Now, the AZO method, the method that you are viewing on the screen, and I'll repeat it, but this is the tried and true. This is the freaking icing on the icing on top, whatever. This method loves mortgage scores, and also loves any installment based score. So if you are in a market for a car, or whatever, do this. I'm telling you to do this. So it's called the AZO method. This is literally the number one trick that you can do with your credit card in order to boost your credit score in general, but especially if you are making a big purchase, because it will do you good. What is the AZO method? AZO stands for all zero except one. It only works if you have at least 3 credit cards, though. That's the only caveat. Unless you have 3 credit cards or more, it doesn't work, because you need at least 3. All zero except one. So what happens is you have to pay off all of your credit cards to zero. So we're just going to take 3 cards. Let's just say we have 3 credit cards. We're going to pay off each credit card to 0% except one. The one that you pick one credit card and you leave a small balance between 1 and 3% on just one card, and then you zero out the rest of your cards. The one card that you leave a balance on is usually best for it to be your oldest card. Your oldest card, and the only qualifier is if it is a credit card. So if it's a charge card like the American Express Gold card, or any card that does not have a limit, then you cannot use that card. You have to use a card with a limit. I'm gonna be honest. I usually just say like use your lowest card. Use your lowest card or your oldest card. Like I have a Capital One card or I have to quit saying names because I got in trouble for this last year. I have a credit card with a company that did not raise refuses to raise a particular secured card that I had with them in college, and it is $200 or it's probably like $500. I don't even know how much it is now at this point because I don't care to use it. However, I do care for the credit age, so I refuse to close it. I have that card, and that's usually like my go-to card that I will use to leave a very small balance on, because it is the oldest credit card that I have. Therefore, it's the most seasoned, and it'll cause the biggest positive impact on my score. So you would zero out all of the balances on all of your credit cards except one, and then you will leave a small balance between 1% and 3%. You will, and you would have to do this again the month prior because your lender, when they pull your report, they're only going to see the most up-to-date reported generated credit report. When you are buying a home, because we have things like rapid rescore that your lenders, your loan officer is able to force, then there's a little more leeway in terms of the timing. But if you are not working with a loan officer and stuff, you're not going to be able to get a rapid rescore. Therefore, you need to make sure you do it the month prior. Okay. Actually, you know what? I am challenging everybody on this live. If you have at least 3 credit cards, I'm challenging you to do the AZO method this month or the next month and see how much your FICO score increases. See how much your FICO score increases. And you're gonna be like, are you kidding me? Like all this time, I did not know. And that, like, I promise you it works. It's so fun to do because it literally always causes a increase. It has to. It literally has to, predicated on how our credit scores are allocated already, how the algorithm, like it has to work. It has to work. And it doesn't matter what you are currently doing. That brings me to my next point. I'm sorry, I have to say this. For my people who have collection accounts, who have charge-off accounts, who have late payments, who have any derogatory event, bankruptcy, doesn't matter. Fill in the blank. If you have bad credit or if you have bad items on your credit report, the worst thing that you can do for your credit profile is avoid building credit. The best thing that you can do for your credit profile is get every point that you can for credit utilization, because that's not determined off your collections. Your payment history, your collections is affecting your payment history, right? So you are going to be missing some points within payment history because of my dog is barking, because of your collections or charge-offs, right? Cool. The only thing you can do is make sure that you are getting as much of the credit utilization points as possible, right? Because you are missing points in other areas. So take advantage of credit utilization, which is not affected by anything other than credit cards. Take advantage of all of those points. And that way you're able to balance out those bad accounts, right? Just because you have a bad item on your credit report, that doesn't necessarily mean that you have to have bad credit. No. I had a collection on my credit report that just would not budge. Wouldn't budge, but whatever. Didn't stop me from doing anything. Didn't stop me from buying a house. Didn't stop me from actually, I think it was charged off at the point. Didn't stop me from getting credit card because I built around it, right? Do not think that you don't need to build credit or you don't need to be applying for establishing your credit profile because you have bad credit. That is a lie. Which brings me to my next point. I don't know why it's funny when I say that. Which brings me to my next point. If you don't know how to build a credit profile, if you don't know how to build a credit profile, if you don't know what that means, if you don't understand if you are doing it right, if you are a person who has been building credit for a while, meaning like you have had accounts open and paying them, but you find that you just can't really increase your credit score, it just will not move, it's not budging, you're not getting great offers and approvals. It's probably because you do not have a great credit profile foundation, right? It's probably because, you may have been building credit, you just haven't been doing it in a way that benefits your credit score, that feeds off how our credit scores are set up and the points are allocated. And what I mean by that is there is a specific way to build credit, right? There's more than one way to skin a cat. So I'm not claiming that my way is the only way to build credit. Obviously, no. This way, however, is the blanket credit foundation that I would recommend to anyone. right? To anyone. I don't care what income level. I don't care what your desires are in the future. And I also don't care how many credit cards, how many loans, or anything that you already have. If you do not have these foundational things on your credit profile, regardless of score, I don't care if you have an 800 credit score. If you don't have at least this, your borrowing power still is not good. Okay. So don't throw away your credit score, throw away any excuse that's going to tell you that, no, you don't need it because you have, no, you need it because of how our credit scores are set up. Right. So if you are, everybody do a credit check, right? Everybody do a credit check and see if you have these items. In order to have good credit now or even in the future, your credit profile has to have at least 4 open primary accounts. What does that mean? It means 4 open accounts in your name. So not authorized user accounts, not co-owned accounts, not co-signed accounts, right? Those, if you have those accounts, cool. They just cannot count for the 4 open primary accounts that we're referring to today. So if you have those other accounts and you don't have 4 open primary accounts, you don't get a check. You don't get a check. So your goal needs to be to open at least 4 primary accounts. Again, primary accounts are accounts that are in your name. Primary accounts are the accounts that 90% of our credit scores are based off. Our credit profiles are based off. So even if you do have an authorized user account and you may have seen, your credit score increase a lot, they will increase a lot. Your borrowing power doesn't match your credit score if your credit score is solely dependent on an authorized user account. It doesn't matter what your credit score is telling you. It doesn't matter what Credit Karma is telling you. Listen to me. It does not matter how good of a credit score, how high your credit score is, if it is not predicated on your own accounts. I promise you. I'm not saying that you shouldn't have authorized user accounts, and if you're on a family member's account that you need to get off. That's not what I'm saying. What I am saying is your credit score should not, or profile should not be dependent on that. Meaning you need to establish your own foundation. Have those, cool, but don't let that prevent you from having your own. Okay. If you have a child that's on your credit card, if you plan on putting your child on your credit card when they turn 17 or whatever the case may be, understand that when they turn 18, they too need to start building their own credit while they're on your credit. Yeah, they can benefit from your credit as well, but do not have them be reliant on your credit. If you are a married couple, or I guess it doesn't matter your marriage status, but like if you're a couple and and let's say there is one spouse that works outside the home maybe, and then one that works at home, and all of your accounts are either co-joined or co-owned, or there's one main breadwinner. I'm saying breadwinner because that's usually the one that will have the credit accounts, and then maybe the other spouse will either be co-signed or authorized AU'd on that person's account. I see this so much with buying a home. That's why I'm going to say this. Married couples, hear me when I say this. I know that when 2 becomes 1, they are 1 in the eyes of the Lord. I know that, and I love that. However, your credit score, no, you are still individuals, meaning that each individuals need to have and build and establish their own credit. Okay. There's no joining of credit scores. That's not a thing. It literally doesn't matter. Even if on your credit report you see where it says co-owned accounts and it has your partner name on it, that is simply for records purposes to validate the information on that account. That does nothing for your credit score, and that does nothing for your borrowing power, right? So make sure that if you are the spouse or your spouse is a spouse that is I keep saying stay at home because it's typically like the mom, the stay at home mom or the stay at home parent that will not have as strong of a credit profile as the other spouse. I want you to know that when you are applying for credit, there is something called the household income, right? Household income means that if there's a non-working spouse, you are able to use your spouse's income to qualify for that card. That was from the Credit Card Act of 2009. Household income counts, right? So don't think that just because you don't go to work that you don't have income. No, household income counts. Legally, you are able to use your spouse's income as your income when it comes to credit applications. Any credit application. Look up the Credit Card Act of 2009. right? So again, I say that to say it is so important that each spouse builds their own credit profile. I I can't tell you how often I see, and I'm forced to, witness a couple not being able to close on a home because of one spouse, because of one spouse didn't know this, because no one ever told them, right? You don't know what you don't know, right? So I'm never gonna condemn you for not knowing, but I am gonna hold you responsible for changing it once you do know, because I'm telling you, it doesn't do the relationship justice at all in terms of financially, right? Make sure that both spouse, if one spouse can build credit, both can, because they both have the same income. Okay. Period. Okay. Now that I got that off my mind, um, you need at least 4 open primary accounts. Now, if you still like, okay, well, what accounts? Don't worry, I got you. Of those 4 accounts, 2 of them needs to be credit cards, revolving accounts, credit cards. I don't care if it's from, it doesn't matter what bank it's from. I don't care if it's from Capital One or it doesn't, I don't even care. Like, or nor does your credit score care. You need to have 2 active primary cards. The card that you had 2 years ago that closed, that's still on your credit report, it doesn't count, babe. It got to be open. It has to be open, okay? It has to be open. 2 active credit cards. Also, make sure that at least one of those credit cards is a open bank card. What does that mean? It just means a card that you can use and spend anywhere in the world. Not in the world, but anywhere, right? Like, it's not tied to a specific retailer. It's not a Walmart card, or yeah, it's not a Walmart card. It's not a Lowe's card. It's not a Home Depot card. Blah 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 blah. It is not a retail card. Now, if you have one retail card, that's cool. However, both of them cannot be retail cards. You need to have at least one open bank card. It has to have a MasterCard logo, Visa logo, Discover logo, American Express logo. It has to be an open bank card. Okay. If you're like, I keep applying and I'm not getting approved, and did I hold on? I'm gonna tell you, hear me. There is not a credit profile in the world that does not qualify for a credit card. If you are applying for a credit card and you are continuing to get denied, you're applying for the wrong credit cards for your current credit profile. And that's just it. There are credit cards for every single level of credit. So don't think that you cannot get a credit card. That is a lie. That is a lie. And I'll give you options in a minute. Okay. The two of the 4 accounts needs to be active credit cards. Okay. Primary in your name. And then the third account, you should have at least one long-term installment. A long-term installment is any loan that is over 36 months in the term length, right? So if you have an auto loan, then you already have a long-term installment. If you have student loans reported on your credit report, that counts as a long-term installment. If you have a mortgage, obviously that counts as a long-term installment. Some what do you call those furniture it's slipping me. Like when you finance furniture, like at a furniture place. I see a lot of those on credit reports, and a lot of those are long-term installments, right? But some are less, some are short term. However, if it's over 36 months, then it is considered a long-term installment. Okay. Um, so yeah, any loan, it doesn't necessarily just have to be the ones that I named. It just has to have a term length, an original term length over 36 months. That's it. That's the only thing. That's the only qualifier for a long-term installment. Okay. So 2 credit cards, 1 long-term installment, and then the 4th account, you need to have at least 1 short-term installment. So remember what I was talking about a few slides ago when I said the only way to have credit is to build credit, and the only way to build credit is if you don't close the accounts, specifically loans, right? You have to, instead of rushing to pay them off all the time early, understand that you need those credits. You need those accounts reporting and being active so that you can build credit, because you're not building credit by going to get a loan and hurrying and rushing to pay it back, right? I know most people want to avoid paying interest in doing so, but as I stated, the cost of good credit is the interest that you have to pay in the beginning. The cost of bad credit is the interest that you're going to have to pay for life. Okay. So deal with it. Now, the short-term installment. I have one rule to the short-term installment. You cannot end this installment early. I don't care, under any circumstance. You cannot end it early. A short-term installment is any loan under 24 months. Okay. I'm sorry, any loan under 36 months, right? Any loan under 36 months. And it has to be at least $250 like the original balance has to be at least $250. And obviously, like if it's most loans are obviously going to be over $250, so that's not really a qualifier, but whatever. It has to be under 36 months to be considered a short-term installment. And the only rule, two rules. The only two rules is you cannot end it early and you cannot miss a payment. I don't care. I don't care what you do, what you have to do. Do not miss a payment on this short-term installment. If you have to get it deferred, if you can't, if you know before the due date comes up that you're not gonna be able to, you're not gonna have it this month, right? Stop just allowing the time to pass. Call the bank, call the whatever, and say, hey, can I get a deferment on this account because whatever is going on. Call and get a deferment before you allow that account to go to miss that payment. Why? Because the only way that this loan is going to justify your credit profile, this short-term loan, is if it is at 100%. 100% on a loan means that you fully completed the loan according to the original term agreement, according to the original loan agreement. So this is the trick. As long as you have at least one loan at 100%, as long as you received an A on one installment within the last 3 years, then you are getting majority of those. I mean, you are getting your borrowing power, rather. I'll just say that because the points vary depending on your credit profile. However, your borrowing power and your lenders, that is a check mark in every system, that every lender in every lender's eyes. Meaning, when you apply for something, a lot of qualifications for taking you up a tier in credit limits, and if you are going to get approved for the lowest interest rate possible, is if you have had a completed loan within the last 3 years. That's something that we as consumers are not usually privy of. When you are applying for credit in any aspect, whether you're applying online or whatever the case, there's a system, right? As soon as you submit your application is reviewed by a system. Obviously, it's not humans. It's reviewed by a system, and that system has a set of qualifications that will determine if you are going to be approved and how much you are going to be approved for. There are certain red flags or certain things that will automatically cause your credit application to be denied, right? Like if you have had more than 3 payments in the last year, that's an automatic denial for most banks, right? And a lot of other things. I don't want to go down that path right now. We'll talk about that in another live. However, one of the things that always feeds the algorithm, feeds the application process, and looks great on you as a borrower, is if you have had a installment of any kind, if you have had an installment completed at 100% within the last 3 years. That does a lot for your borrowing power. That does a lot. So make sure when you are building credit that you seek to complete a short-term installment at least once every 3 years. So I personally, I'll get a self account or something like that. I'll give you guys options in a second, but I'll get like a self account, a credit builder loan that's like $200, $300 total. The monthly payment is like $25, and I religiously pay it monthly, and I'll get it at least. I usually get it every other year, right? Like once every 24 months. I do one term, and then I allow it to close or whatever. Not allow it to close. I complete it, but I don't really worry about getting another one until I'm approaching that second to third year mark, because I understand how valuable that completed loan is to my credit profile, and how they stack up over the years, and how much better, and how it gets. It's like the gift that keeps on giving. It just gets better and better as you do them, because you're just building more and more. You're building more and more trust with the lenders, and all the lender care about when it comes to borrowing money, which is building credit. All the lender care about is if you are risky, if you have the potential to be risky, meaning can they trust you that they'll get their money back? Because if you are risky, that means that they don't trust that they'll get their money back. So obviously they're not going to loan you anything favorable. If they do loan you something, it's going to be at a very high interest rate, because they are taking a chance on you. You don't want to be the one that they have to take a chance on. That's not a flex. You want to be the one that they're trying to throw money at because they know that they're going to get their money back, right? You want to be this one because that's the only way that you are going to get the 1% interest rates or lower. Being able to build business credit very like without having to worry about those net 30 account. Like, I wish I would stress about those. And I've built hundreds of thousands of lending, I mean, of funding and business credit simply based on how obedient I've been in my personal credit score. And it's not on my personal credit report, right? No, your negotiation power and your leverage is different when you have the credit profile to prove it. What does that mean? There isn't a year that passed that I don't seek to for my banks, for my credit card banks, my credit card bank, for my banks to lower my interest on my credit cards. Or if I, for example, if I apply for a credit card and I feel like the limit is not what I deserve, right? Predicated on my credit report and what I have shown, I'm quick to call and ask for a reconsideration in credit limits, or I will say I don't want the credit card. Do you know how much negotiation and leverage that does to a bank? Do you know how, for example, I just recently had this and I got a screenshot because I wanted to show you guys. I applied for Venture X. Anyways, I applied for the Venture X with Capital One or whatever. And they was running a real good deal, entry deal for points. So I was like, let me go ahead and apply for it because I'm really the biggest fan of them. But I did apply for it. And they approved me. I think the starting limit at what did they approve me for? I believe I want to say it was 25 or something like that. Most people would have been like, okay, cool. Let me get this. This is a good limit. I was so offended. I immediately called them. I called their reconsideration line and I said, well, I'm requesting a reconsideration of that limit. Why? Simply because if you look at my credit profile, number one, I have multiple cards over that amount. Therefore, if you are only approving me for this amount, why would it encourage me to use your card? What will make your card so special? Two, I don't need your card, right? Like they can look at my credit report and it's very clear I don't need the card. Three, there's nothing on my credit report that would make you believe that I'm a risk of any level. Therefore, if I'm not getting your top offer, then there is an issue. You can't even tell me why you didn't approve me because nothing on my credit profile shows risk, right? Guess what happened? Okay, he said we'll call him back. I got an email not even 10 minutes after I got off the phone. I kid you not even 10 minutes of being on the phone. $60,000, just that fast, simply because when you get a credit limit that you don't like and you know that your credit profile is solid, that gives you leverage, that gives you negotiation power. No, I'm not going to just accept crumbs when I know for a fact that if I go to A, B, C, X company, they'll give me more, right? So when you do build your credit profile, you can talk different, you can speak different to the lenders, right? I remember it was like last year I was going for I needed funding for a business loan, right? It was almost the same situation where they tried to approve me for something that no, I wasn't with. No, I'm not accepting this. I'll go to the bank down the street and I'm sure that they'll approve me. It's not like they can look at my credit profile and say, no, they want to, no, they know they will, right? And they want business, they want to make money. I'm not special. No, it's just my credit profile shows that I'm a low risk borrower because I strategically set it up, right? Therefore, if you are a lender, you want as many low risk borrowers as you can, right? So it's not about me. It's just more so about me understanding how credit works. And I say that to say that how you set up your credit profile determines your borrowing ability. Like it really does make a difference on everything. Everything. Like everything that you have now, whatever you have now, right? Know that you can get more. You really can, because then you're able to have so much freedom with your credit. You don't have to worry. Like I don't even worry about reporting under 9% because I would have to be going crazy if I spent 9% of the available credit limits that I have, right? You don't have to worry about those things when you are, when you have a solid profile and you have the limits and stuff like that. You don't have to worry about it. You don't have to really penny watch, right? There was a time where I had to, so I know how it feels. But now if I report over 9%, I quite literally must have went crazy. Like it's way too easy for me to report between 1% and 3% because of how much credit I have available, right? So it's easy. The more you build credit, the more you deal with, like, the easier it gets. Literally, the easier it gets. The hardest part of having good credit, in my opinion, the hardest part of having credit is right when you fix your credit. That is the hardest part, because then you're getting approved for things that you have not got approved for before. You starting to get these instant approvals. That's exciting as hell, especially somebody who had bad credit. Let me tell you, when I first started getting approved, it was like a high. I was like applying for any and everything, because I was like, what? $1,500? I still remember when I got my first $10,000 credit card. Like, that was a moment for me. And you just start applying for things because you're just not used to it. Listen, I know. I remember the feeling, right? Now, it changes. Like, so that's the hardest part to me of having good credit, because then, like, the freaking temptation of getting too much and it's just too much because you're not used to it yet. But after you get used to it, it honestly, like, it just sustains itself. It sustains itself, right? I don't even know why I got off to a tangent. Anyways, so yeah, so this is the profile that everyone needs to have, the foundation rather, if you want a chance at having good credit. This profile feeds directly to how our credit scores are allotted. It is buildable, meaning, like, if this is your foundation, and it doesn't matter what time or how long you've been building credit, the timing is not what foundation is. As long as you have these, then the more time that passes, the more your credit report and your credit profile is automatically going to be considered a great credit profile, because these are the foundation. This is the foundation. So even if you already have 20 accounts on your credit report, if you don't have at least these, then whatever you are missing, whatever check mark that you did not get, check that box and watch the difference that it makes in your borrowing power. Like, truly, especially, I love this for the ones that have good credit. Like, there are so many people that have, like, the FICO census showed that the average credit score in 2024 was 718. So what does that tell us? It tells us that a good credit score is not hard to get. It's not even unusual. What they also showed was we have the lowest available amount. We have the lowest amount of available credit amongst, whatever, ever. So our average credit score has increased to the highest that it's ever been, but our available credit that we have has decreased. What does that tell you? That tells you that a credit score is nothing but a vanity number. It doesn't matter. There are a lot of people with good credit that don't have the borrowing power to match. So they just have good credit. And that's it. To me, it's nothing worse. I quite literally would rather have bad credit. It's nothing worse than having good credit and you can't use it. You can't get the benefits of having good credit. Give me the 600. Give me the 600 credit score. If that means that I have a solid foundation based on primary accounts, then me trying to get a 700 just for the hell of it. Give me the 600. Because I don't want just a high credit score. No, respectfully, I don't want that. All right, where was I at? All right. Okay. Look. So, if you are a person who has not been able to be approved for a car, you don't know who to apply for, what to apply for, the cars that you have applied for, you've probably gotten denied. Then that either means that you have bad credit or you have no credit. If you are new here and you are, like, triggered by me saying bad credit and because it does sound harsh or whatever, you gotta get over that. Okay. Bad credit is bad credit. That don't mean you're a bad person. Bad credit means that you have derogatory accounts on your credit report. Okay. No credit obviously means that you have not established credit yet. Okay. So if you have bad credit, then you're gonna have to start with a subprime card. There are this list of subprime card holders. Let me make it bigger so y'all can screenshot it. Subprime cards are cards that are specifically designed for people with bad credit, right? Meaning that they don't expect you. There's no certain credit score that you have to have in order to get these cards. There is no amount of experience that you have to have in order to get these cards. While most of them are secured cards, they all of these cards on the list, they report to all 3 credit bureaus, because that's the only thing that you need. If you are a person who, don't kind of turn your nose up at subprime cards, and you can't get a like the at least a starter car, then you're turning your nose up at the wrong thing there, because these cars are not meant for you to have for life, right? I'd say all the time, you don't have to marry your subprime card. You just need to use it as a step on your journey. You need a step though. In order for you to get the cars that we're about to talk about, then you have to already have established at least 18 months of having a credit card. Okay. And also your credit score doesn't care about the name of the bank. Okay. They also don't care about your limit. Right. So you can have a subprime card, two subprime cards rather, that's $200 each. And it'll do the same as somebody with a $20,000 credit card, because it's not the limit that makes a difference in our credit scores. It's the percentage that we carry over or don't carry over, which is our utilization, right? So don't trip on the freaking name of the bank. Don't trip on the subprime card. This is literally just to get you started. I started with multiple subprime cards, and a lot of credit cousins have as well. You understand that this is just a temporary situation. It start with a subprime card. It is much better for if you are fresh out of bankruptcy, right? The best thing that you could do right after filing bankruptcy is immediately start building credit. Immediately start building credit. You can do so by starting with subprime cards. You need to remember you need at least 2 credit cards. You need at least 2 credit cards. I don't know if I mentioned this, so I'm gonna mention again. The reason why you need to have at least 4 accounts is anytime you have less than 4 open accounts reporting on your credit report, your profile is considered a thin profile or inexperienced profile. So it doesn't matter what your credit score is, you will never get any great offers. You will only get the offers that's, you know, that are for inexperienced credit profiles, which is not the best offer, right? No matter how long you've been building credit, if you don't have at least 4 open credit card accounts, if your credit profile falls under 4, not credit card accounts, if your credit profile falls under 4 open accounts, you automatically are deemed to have a thin credit profile. Anytime you do an application, it's literally going to have the thin credit profile code on there. Yes, meaning you don't qualify for the top offers. It don't matter, right? Make sure you have at least 4 open accounts, okay? That's the quickest way to build your score. That's the quickest way to establish credit. Okay, moving on. If you are a person with no credit, if your child has just turned 18, if you are just haven't used credit cards, whatever, right? Like you just haven't really built credit. You kind of had maybe a car here or there, student loans or something like that, but you haven't like intentionally built credit, then you likely will qualify for a starter card. The difference between a subprime card and a starter card is a starter card requires no experience. Or a set credit score, right? However, a subprime card, a starter card does, but a starter card doesn't accept recent bad derogatory accounts. Most starter cards will deny you if you have multiple, like derogatory accounts, right? Which is where the subprime cards come in at, because they're specifically made for people with bad credit, right? So your subprime card, don't expect that your card is going to have a high limit. Don't think that it's probably not even going to graduate. I'm not going to hold you. And it'll have a high interest rate, right? You shouldn't be paying interest on your credit card anyway, but that's a whole nother live. Subprime cards are dead end cards. You're not marrying them. You don't have to have them for life. They're just to get you to the next level. They're last resort options. And yes, they will have low limits. There's no reason to have a high limit on a subprime card anyway. You're not going to want that card in a few months. I promise you. Learn from me, because I open so many cards and I hate majority of them. Okay. Then the next level after subprime is starter, which starter cards are starter for inexperienced borrowers. So no, they won't have the highest of limits. Most of them don't have reward programs and all of that. They're literally just to get you started. It's tailored for individuals with minimal or no credit history. And then, by the way, starter cards, they usually are secured lines of credit, like $200 or whatever. But some are unsecured. They typically have low limits. Low limits is anything under $1,500. And then they have a limited growth potential. That's important to know, because most starter cards, like my Capital One card that I was telling y'all about, they don't really, the ceiling of the limits are very low, right? Like most starter cards will never surpass like $1,500. And that's okay. That's what they're meant for. Okay, guys? If you are still in your starter card, let me not say that, because I'm going to go to the next level. Now, the next tier of credit cards is my favorite credit cards in the world, even more than the premium cards. The mid tier is my buddy. The mid tier credit cards is the best to me tier of credit cards because they are the ones that are tailored towards everyday living, everyday spending, the everyday average American. These are going to be the cards that the mid-tier cards are cards that they have a high growth potential. Let me just say that the ceiling for growth on a mid-tier card is usually the mid-tier cards tap out at about like 60 to 70K, right? On average, meaning like that's the highest that they would allow in most of those, and some higher, but on average about 60 to 70K. Second, they not graduate. Those are the cards that will usually offer the most regular credit limit increases. They obviously do not require a freaking perfect credit score, none of that. Typically, in order to qualify for a mid-tier card, you just have to have at least a year to 18 months of experience with another credit card. That's where the subprime and the starter cards come from. Remember, right? There is no limit. Oh, because I meant to say this. With a subprime card and a starter card. So any cards in these two, if you look on these two lists, the subprime list or the starter list, and you see that you have two of those cards, that is the limit for this level. Do not get more than two subprime cards, nor should you ever seek to get more than two starter cards. Why? Because they are starter cards. So there's a ceiling to how much that they can grow, and it's very low. If you there's no reason to have more than two of these because they are only meant to get you to the next level. Like these cards are not meant to be the ones that you are like freaking doing balling with. You know what I'm saying? Like, no, these cards are really for starters. Allow them to be what they are for. Love them for helping you get to the next level, but understand that should not be your stopping point. If you are stopping at a starter card, you're doing it wrong. You're doing it wrong because honestly, there's no point in building credit and getting a credit card if you're going to stop at a starter card because a starter card don't even have rewards. That's where credit get fun. That's where the credit cards get fun, which is the mid tier. That's why the mid tier is my favorite. And obviously, this list is not exhaustive. Like these are just my favorite in each category, right? But anyways, the mid tier is the most exciting one because they come with the most rewards. And you get rewards for everyday things like going to the grocery shop. Going to the grocery store, ordering Uber, ordering DoorDash, like literally the things that we do on a normal basis, getting gas. Mid-tier is tailored for the everyday American, for everyday living. These are going to be the best everyday cards, right? If you know me, you know I routinely tell you guys, I am a person that lives off my credit cards. What does that mean? It simply means that all of my day-to-day expenses is on a credit card. If it can be on a credit card, I will put it on my credit card willingly and happily. Why? Happily. Why? Because I enjoy flying for free. Because I enjoy shopping and getting stadium tickets and stuff like that for free. And the only way that you're able to do that is if you have points. Not the only way, but I want to be given something every time I spend my money. I don't know about you. Like, I don't know. It's just something about having to swipe my debit card that causes a visceral reaction every single time, right? If you find yourself pulling out your debit card as opposed to a credit card, if you have one at McDonald's or at the gas station, you are doing it wrong. You are doing it wrong. You're doing it wrong. I promise you are doing it wrong. You have to switch that mindset, and instead of spending on your debit card, you need to start spending on your credit card so that you are able to get points. And obviously, the money that you already had in your debit card, your bank account that you was about to spend on your debit card, use that to pay off your credit card. Just make a habit of replacing your debit card with your credit card and paying it back. If you do that, then everything will change. Everything will change. It's been over 4 years since I've spent a penny on a flight. A penny. I don't pay for flights ever. I fly for free anywhere in the world because of how many points I have. And I'm not doing anything special other than paying for the things that I already pay for. Getting credit cards that suit the way that I spend my money. For example, the American Express Gold card, one of my favorite cards. That card gives me 4 points for every dollar that I spend at a grocery store, on Uber Eats, on DoorDash. I can't even think of all the rewards right now. I just had a brain fart. But anyways, that card is the card that I probably get the most points out of. And you could be in the 600s and get this card, by the way. You just have to have the experience of no late payments on a credit card for at least 12 to 18 months, but it's not that live. And then after the mid-tier is premium and invitation only, I just don't want to waste my time talking about those. Y'all see them. Back to what we was talking about. This turned into a whole nother level, but whatever. Speaking of, why doesn't it go to the next slide? Speaking of, My next point is credit limit increases. If you have a mid-tier card, at least if you have a mid-tier card and you don't ever get credit limit increases, or like, maybe your bank only gives you one limit increase in like a year or something. Stop doing that. Stop waiting for them to give you a credit limit increase. No, no. Do not do that, y'all. Do you know, and this is statistically shown, do you know that if your bank is the one that is offering you a credit limit increase, whatever they offer you, I don't care if it's a $5,000 increase, whatever. Do you know that studies show that the people who ask for a credit limit increase and the people who wait to get a credit limit increase, it can happen on the same day. You will get more if you ask. You will get more. If they have to literally beg you to take the money, they're not going to give you anywhere near you would have got had you applied. Y'all know what I always say. When I see that one of my credit cards got an automatic increase, I want to cry. Why? Because that tells me that I should have been applied for a credit limit increase, and now I can't apply for it for another at least 90 days. So now I waited around for them to give me a little bit just to get me interested when I could have gotten more. If they whatever no anytime you get an automatic increase, know that whatever they gave you, you absolutely could have gotten more had you requested a credit limit increase. Okay. But well, y'all can see that I don't have to go over every point. Let me quit looking at it because I'm gonna want to go into it and I'm not. Yeah, I'm trying to end because it's supposed to be a power hour. Okay, just a few more points. I'm gonna make this document that I have on the screen. I'm gonna make it available for y'all to download because I certainly do not feel like going over every point. Okay. Plus, I want to get to a few questions before I get off here. Oh, what I want to go over. I don't feel like going over that. Which one y'all want me to go over? Do y'all want me to go over how to get a credit limit increase without a hard inquiry, which is it's not as exciting as it sounds because y'all gonna get the document. Remember that. Or would y'all like me to talk about late payments? I'm sleepy. That's the thing. I'm sleepy. I may have to come back live tomorrow. I'm not gonna hold you. I'll talk about one more tonight, and then I wanted to talk about the charge offs. Which one, y'all? Because I'm sleepy and I have to get up at 5:30. I didn't know who's gonna go. So you know what? Today was basically about credit cards, right? I just thought about that. We really pretty much talked only about credit cards and payment history. So tomorrow I will do the how to properly challenge charge-offs. But by the way, y'all had a document. So I'm to be honest, like, do I gotta read point for point? Like y'all had a document. It's free. I'll make it available. Actually, let me drop the link right now because Lord knows I will forget. Let me just drop the link so y'all can go ahead and download it. Because I know that if I started now, I'm a half A it, because I just don't have the energy. I'm like literally tired. Okay. Where is it at? So I'm just gonna drop the link and meet me back here tomorrow. I'll title the live, turn on your notifications, but I'll title the live how to properly challenge a charge off. Okay. Where is what is it called? What did I name it? Master your credit. Okay. Because I just don't want to do it if I'm not going to do it all the way right. I just don't want to. Dang, I got to sign in. Hold on, y'all. I'm signing into my Google Drive. Am I able to just include it like a download? No. Okay, hold on. What's my password? I hope y'all can't see my screen. Hold on, y'all. Let me figure out my password. Okay. I'm just gonna go on my phone because I don't be knowing nobody's password. Chill. Here we go. Okay. Not my phone on 1%. I'll take a few questions though, really quick while I get this loaded. What happened? Okay, I'll take a few questions, but let me get this loaded. Did you guys learn anything? Because I feel like I kind of rambled, but it's cool. What did I save that under? Let me just upload it again, child. Oh, right here. All right. It is uploading right now, and I'm gonna get the link for you guys. Okay, cool. Yo, make sure y'all go watch the let me show you. I'll just show you because I was supposed to be promoting it. Y'all know I'm a horrible marketer. Hold on. Let me pull it up. Is it uploaded? Okay. Do me a favor, okay, guys? Go and watch this. Where's the video? Okay. Go and watch the EYL interview that dropped today, where we touched on the topics that we discussed today. And then tomorrow I am going to do the charge off one, which it honestly makes sense because it needs to be its own live anyway. Do y'all, just real quick, do y'all know what really bothered me about this interview about myself? I don't know why I would like briefly introduce such a complex topic knowing that like the time was limited. I was like, girl, what was you doing? What was you thinking? You probably got them people confused. Oh, here we go. Here we go. How do I get the link on my phone? Yeah, I was like, really, girl, really. So yeah, I'm definitely doing the live tomorrow. I'm just trying to get this link. That's really why I'm holding y'all here right now. That's my king. Save to files, Lord. Okay. All right, so I'm about to put the link in the chat, and then I think I could put it in the video too. Not the video, you know what I mean. You are okay. It's uploaded fine freaking okay. And by the way, EYL, I sent them the document. They said that they will upload it. But I don't know if they uploaded it yet. They may have, they may not. But in case they did not, it is all good in the hood because we're gonna do it. We're going to upload it. All right. So do y'all see the link? Let me know if y'all see the link before I end it. It's in a chat. Well, no, I can't put it on the screen because it's a long link. I mean, I guess I can, but I'm not sure if that'll help. Oh yeah, can't see it. Y'all don't see my comment? Can somebody? Akia, do you see it? I'm looking at it. That's strange. Okay, let me try to do it again then. I don't think putting it on the screen is gonna do anything. Okay, hold on. Okay. All right. Now, do y'all see it? Why is it? Pin it. Okay. Okay. I don't be knowing my password on the computer, yo. That's what kills me. I'm gonna go and comment from my phone and do it. All right. Child, I'm too sleepy for this. Why is it acting crazy? Oh, the folder. Okay. Maybe I need to do its own folder. Um, how do I? Okay. I gotta give y'all permission. Modify settings. Allow downloads. Anyone who has access with the link. Okay. All right. Copy link. Okay. All right. All right. All right. All right. Now, download link. Oh, child, I'm sleepy. All right. Now. I did I pin it? See, it's right. It's in the comments, but I know on the screen it's not gonna work. But I also will put it like in the description of the video, but that's not gonna show until after I end the live. But let me just paste it a few more times, like in a comment. Let me know, does that go to the? I should have probably checked the link before I sent it. Let me see. Copy. Okay. Yep. It goes right to it. Let me know if you guys are able to download it. Can somebody check if y'all able to download it before I get off of here? Because I'm gonna go right to bed and I'm not gonna know. If you're in Credit Academy, I will Akia. Can you upload it to the files in the app tonight? Uh it was something else that I was just about to say, but I forgot what I was about to say. Yeah, so Credit Academy, you guys will get a dedicated teaching for each of these topics that we discussed, like a actual webinar, by the way. Y'all got it? Yeah. Can y'all download it though? The just seeing it is it's make sure y'all can download it because sometimes they won't let like people download it. That's why I'm trying to make sure before I close out of here for tonight. We can just copy the link to a zip download. Okay, we good. Period. Period. So yes, please read that over. And then especially probably read the charge off when the information for the charge off before tomorrow. So it can make sense because we will discuss if you have charge offs on your credit report and you are wondering how to properly challenge it legally the right way, then make sure you are here tomorrow. Make sure you like turn on the notifications because I don't know the exact time. That's why I'm saying it. Make sure you turn on the notifications because it will be at night, but I don't know like the exact time. Okay. But I will be live tomorrow. Subscribe to the channel, turn on notifications. And yeah, we gonna be right back at it tomorrow talking about charge offs. Okay. All right. I hope you got it's 14 pages. Listen, I hate to not be I try to be as detailed as possible and as thorough as possible because the little small nuances in credit does make a difference. Yeah, it does. So yes, I love you guys so much. I hope you learned something. Please go watch the EYL interview. Shout out to EYL for always inviting me on their platform to teach their audience, to teach their members. If you hear from EYL, let me just say that if you hear from EYL, put like a 2 in the chat. If you hear from Credit Academy, put a 1 because ain't nobody gonna go before Credit Academy. Okay. No, but I am curious to see like who's in the building tonight. If CA Gang 1, and then EYL 2. Was anyone at InvestFest? I know that's right. Yes, ma'am. Yeah, I'm gonna be. You downloaded it? Okay, cool. I look sleepy. All right, so make sure you guys put your notifications on. I'm gonna be live tomorrow talking about charge-offs. If you have a charge-off, I encourage you to be in the building tomorrow, because 9 times out of 10, if you've tried to challenge that charge-off in the past and it has not gotten deleted, it was most likely because you didn't challenge it in the way that I will present tomorrow. Okay, because it's actually something that I found out that I really, really honed into about a year ago, and I've been testing it out, and I'm excited about that method. But yeah, we'll talk about it tomorrow. And yeah, meet me back here, okay? All right. Good night. Love you guys. God bless you guys. And I will see you tomorrow. I'm out. Peace.